Welcome to The Explainer. Today, we're jumping into a really fascinating economic story. You might be wondering, what can just 4 days of data really tell us about a major global economy? Well, in the case of Turkey, it turns out it can tell us a whole lot. So between August 11th and 14th, this absolute flood of key indicators came out, covering pretty much everything from industrial muscle to global investment. I mean, it's basically like watching an economic stress test play out in real time, and it gives us this incredibly powerful snapshot. So what's the big picture here? What story are all these different numbers actually painting for us? Let's break it all down day by day. Okay, first things first. Let's get the lay of the land. We're looking at a 4-day economic snapshot, just a whirlwind of data that really sets the stage for everything else. So here's how this crazy week breaks down. We kick things off on August 11th with industrial production. Then, on the 12th, it's the current account balance. The 13th is a big one, housing and foreign investment. And it all builds to a climax on the 14th with currency, inflation, and gold. Yeah, it's a lot to cover, so let's jump right in. All right, let's get into our first big topic, the engine. We're talking about production and property here. You know, the core domestic drivers that are really pushing the economy from the inside. And wow, right out of the gate, we get a huge number. Industrial production for June shot up by a whopping 8.3% compared to last year. That is a seriously strong signal of economic activity, and it bodes really well for third quarter growth. Okay, so an 8.3% jump is massive. But what's really driving it? Well, it's mostly coming from a strong manufacturing sector. We're talking machinery, cars, chemicals. But it's not all smooth sailing. There are some potential risks on the horizon, namely slowing global demand and high financing costs that could definitely put the squeeze on things later on. Now, from the factory floor, let's look at the housing market, which posted an absolutely giant number in July. Get this. Over 142,000 housing units were sold. That's the highest level all year. I mean, that market is just absolutely on fire. So what in the world is fueling this boom? You can kind of break it down into three parts. First, you've got just this raw energy in the market, with mortgage-backed sales surging over 60%. Second, you're seeing a real shift in how people invest, with more and more turning to real estate. But, and this is a big but, just like we saw with production, there are limits. Sky-high prices and the rising cost of borrowing could eventually hit the brakes on all this demand. Okay, so we've seen this really strong domestic engine chugging along. But how does that internal strength play out on the world stage? Well, this next part is all about the global balancing act, that constant push and pull of international money. And this, right here, is really the core of the story. It's like a tale of two completely different flows of money. On one side, you've got a clear vulnerability. The current account deficit widened to over $2 billion in June alone. On the flip side, though, you have a major strength. Foreign direct investment, or FDI, soared by over 27% in the first half of the year, hitting a 2-year high. So you see the tension? Money is flowing out, but a lot of long-term investment money is also flowing in. And all of this leads us to August 14th. You could almost call it the day of reckoning, the day where all these big picture pressures really snaps into focus. We're talking about currency, costs, and confidence. And you can see that pressure crystal clear right here, in the currency. On the morning of August 14th, the US dollar was trading at 40.78 Turkish lira. Now, compare that to before the election, when it was under 20. That's a huge deal. It makes everything imported more expensive and puts enormous pressure on inflation. So with the currency under pressure, how did the central bank respond? Well, they were crystal clear. In their inflation report that same day, they basically said, price stability is our #1 priority. We are going to continue with a tight monetary policy. That's central bank speak for get ready for high interest rates. Okay, so when you see all this turbulence, all this uncertainty, where do people park their cash? That's where this idea of a safe haven asset comes in. It's basically an investment that people run to when things get chaotic, hoping it'll hold its value or maybe even go up. And in Turkey, for a lot of people, that safe haven is gold. No question. So on August 14th, with the lira falling and some jitters in the global markets, the price for gold just surged. You know, it's a classic move in economics, a flight to safety, with investors using gold to try and protect their wealth. All right, so let's pull back a bit and put all these pieces together. There are a few other data points that really help add the final brushstrokes to this economic portrait.
So, looking at some other numbers from July, you can really see that growth story we've been talking about. The population is growing, which adds fuel to the economy. Exports are up, and check this out. Exports to Spain hit an all-time high for July. And remember that housing boom? Foreigners bought almost 2,000 homes in that month alone.
And if we zoom in on who's buying those houses, well, it reveals something pretty fascinating. Of all the homes sold to foreigners in July, who were the top buyers? Russian citizens. It's a perfect example of how massive global events connect right down to individual people buying homes. So at the end of this 4-day economic roller coaster, what's the takeaway? I think it all boils down to this. You have an economy with a really powerful growth engine. You can see it in production, in housing. But that engine is definitely shaky because of some serious stability risks, like the currency and inflation. And that leaves us with the big, critical question. You've got this strong domestic growth running headfirst into these rising external pressures. Can this delicate balance actually be maintained? Honestly, that's the multi-billion-dollar question hanging over everything in the months ahead. Thanks for joining us on The Explainer.